Well, it doesn't take a rocket scientist here to recognize that the Dividend Investors Dream ETF SCHD hasn't been faring all too well recently. I mean, it's down by almost 2% as of the other day, 3.24% over the last 5 days, 4.67% over the last month, nearly 8% if we take a look at the last 6 months. And get this, down by a whopping 11.32% year to date, which all begs the question, or two at least. The first, why is SCHD continuing to slide in the environment in which we're living in while it should be stabilizing? And two, is SCHD still a worthwhile investment for us dividend investors? Now, before you lose your marbles and make an irrational investment decision based on emotions, let's dive right in and talk all about SCHD. So we all know the Schwab US Dividend Equity ETF, and since its inception, we have really come to understand it as the dividend investors' go-to dividend ETF. But now lately, shareholders of this dividend ETF have been offloading shares of the fund itself as it's been tanking, as we've seen, by 11% already on the year. And the truth is, it could even experience more downside. Now, that's particularly interesting because, of course, SCHD, as per the fund's objective, is to simply track as closely as possible the total return of the Dow Jones Dividend 100 Index, with the total focus here on dividend stocks that are revered for their quality and dividend sustainability. So, to give you a taste of just the type of quality we're referring to here, we can see some of SCHD's top holdings come down to true industry leaders like Amgen, one of the world's largest pharma companies, Verizon, our telecom leader, Merck, and Broadcom, AbbVie, Coca-Cola, and Pepsi, Cisco, Pfizer, and Chevron, along with 94 more companies just like them to net this ETF over $44 billion in total assets. And in today's economic environment, as investors remain troubled with our economic future, especially when it comes down to the Federal Reserve's next interest rate hike chess move, or just overall concerns for a major market correction, SCHD would seem like the most ideal ETF to not only invest into for safety and appreciation amidst the uncertainty, but dividends as well, as we can see that this ETF has been growing its dividends consecutively over the last 11 years at a tremendous 13.69% growth rate, resulting in a current dividend yield of 3.91%. So this now leads to the first question, which is why SCHD has been sliding and can't seem to find its footing. And a major part of SCHD's poor performance throughout 2023 has actually been because investors have been all about mega caps and big tech stocks throughout the year despite the riskier bet on them. But for the last few years now, economists have been calling for a market crash. Jamie Dimon forecasted an economic hurricane, and investors were just troubled by a depression-like environment. However, no market correction or crash ever came, and investors were just pouring more and more money into riskier bets. Though economic warning signs are actually still right in front of us, they continue to pour money into those riskier bets. And I do believe that all the warning signs will continue to be overlooked or dismissed until it's far too late. However, when it comes to SCHD, this is what we truly have to take a look at, because what's missing in this fund is actually the deeper value or growth-oriented holdings that would otherwise drive the fund to, say, similar performance to Vanguard's Dividend Appreciation Index Fund, as we can see that the two funds began in 2023 neck and neck, but Vanguard's VIG ultimately prevailed, likely because of those juicier holdings within it, like Microsoft, Apple, ExxonMobil, United Health, and JP Morgan. But then does that ultimately mean we should just totally ignore SCHD? I certainly don't think so. And a matter of fact, if we take a look at historical charts here with SCHD, it has a great profitability profile and better than most dividend ETFs. Overall, it has better longer-term value for dividend investors who are just willing to remain patient. You see, if we look deeper into SCHD's historical charts, we see a dividend ETF that has literally returned over 33% growth to shareholders over the last 5 years and over 162% worth of growth since inception. But more importantly here is actually zooming into some of the key volatile periods when it comes to SCHD, dropping to some of the levels that we're experiencing with it now in 2020. We have it as it fell from $58 to $40 per share, creating a perfect buy-in price, or in May of 2022 when SCHD slid by over 7%, only to rebound with another drop in August of 2022 after SCHD slid by over 12% before quickly bouncing back to experience another drop at the onset of 2023. Now here we are with SCHD once again in the red, to which I would share is just another buy-in opportunity for the long-term dividend investors to score SCHD at a discounted buy-in price. After all, isn't that what we're all looking for? Quality investments at a fair or undervalued price? Yet, The truth is, we humans tend to experience more pain intensely than pleasure and joy, meaning when there is fear in the streets, it often feels like just a punch to the gut as we cower away from opportunities. But I want to leave you with one final thought here when it comes to SCHD. And you should head over to Schwab's site itself to follow along and see for yourself, because if you review the fund's performance over the last 10 years, you would come to find that a mere $10,000 investment a decade ago would have yielded you a beautiful return that would have more than doubled your money to a value here of $27,385, and all for the low cost of just $6 annually per $10,000 invested, as the expense ratio comes in at just 0.06%. Now, investors, over the last decade, we've seen a lot of volatility, but SCHD has been on that come up. Now, this means opportunity is knocking, but now I want to know your thoughts on SCHD. Is it cheap? Are you holding it? Are you buying it? Are you avoiding it like the plague? Let me know all your thoughts down in a comment below. And of course, if you found this video insightful, you're going to love this one right here as well. Give it a click. But before you do, make sure you subscribe to never miss a single dividend stock idea.